Greg Vanel. Welcome to Market Call tonight. Our guest is Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Stick your calls, your emails, and your tweets on precious metals and North American dividend stocks. So give us a call, toll free, 1-855-326-6266. You can send an email to marketcall@bnnbloomberg.ca, or you can tweet us at Market Call. Jaime, great to see you. Always wonderful to have you on the program.
Thanks for having me back.
When I heard I was sitting down with you tonight, I thought gold, 7-year highs. This is going to be a happy man.
I am happy, but I'm also concerned. You know, I've been buying precious metals for the last couple of years, warning people to prepare for uncertainty, have it as a hedge for more and more uncertainty. And what a black swan we have now, right? At first, when I was here last month with Anita, we were talking. I think he had just started to, the coronavirus had just started to sprout, and I wasn't too concerned. But I'm looking at what's happening now, and you know, there's going to be some stresses in the supply chain. We've set up this global system of having everything produced in China, and it's getting cut out. Last report I read was March 16th, early March, I believe it was March 9th, we would have unloaded the last ship that left Hong Kong because China, there's nothing being sent our way. So there will be some supply chain issues that are going to arise. What this means is good for gold, because are we ready to deal with a mess? This is going to be a massive slowdown, and central banks, there's only one solution: to print money. We don't have any reserves built up. What we have is way more debt. So what's going to happen now? It's an uncertain event that I think gold, precious metals, and the safety trade, I think, makes a lot of sense at this point. You know, it's funny, I keep watching the markets going higher, and I keep thinking of that scene in the movie The Big Short, where the guy said shorted, everything was right, but the markets continued to run higher until they didn't. I think we just have to wait for that point. Whenever that occurs, we'll wait and see. But for now, it's nice to see gold and the dollar moving higher. It's showing that part of my strategy is working, and it is the ultimate safe havens are coming in.
Now, you talk about the fact that, of course, despite the coronavirus and the spread and the rise of the death toll, we've seen markets hitting all-time highs recently. Goldman Sachs came out this week in their global equity strategist and basically said complacency. You know, are people not recognizing that this is going to hit the bottom line of corporate earnings? But is it that idea that the Fed is going to save us from everything? Have we fallen to that as investors? The Fed, no matter what happens, the Fed will save us from everything.
Well, you know me, I lost trust in the Fed back in 2008. I've been playing defensive since then and being more cautious. At some point, this has got to end, right? We can't continue just printing money. The issue with debt, we can't issue more debt because we're not getting any economic growth. We've reached ultimate utility of debt. Because of that, something needs to occur, and I think it comes down to the currency reserve. I've always said that when we reach these points within the global economy throughout history, undoing the currency reserve, the US dollar is the only way forward, and I think that will play. And for 4,000 years, that has happened around gold. So I'm still very bullish about gold and what's going forward. Now, I have my positions in place. I'm good to go with that. So I'm looking at other areas, things that I think are more fascinating, like blockchain, for example, that I think we have a double bottom. I see it like buying Google back in 2003, 2004, after that first burst. That was the time to be shopping for good companies in that area, and I think that technology fascinates me because we can finally participate out of the growth of the system. But it's right now where, remember when the internet, it was just professor communicating through the phone with the internet, very little integration. Well, we've just crossed 1 billion in Ethereum-based apps. So that will continue growing, and companies that are using those apps are saving a lot of money. So the savings on the accounting and ledgering side are going to drive the technology, and I think that is an area that I would definitely be looking at going forward.
Are investors confusing the underlying technology with the Bitcoin, the coin craze?
Well, that's a good question, but I think that's like confusing the internet with Google versus PayPal.
Okay.
Different animals, right? What's interesting is that the value of the blockchain will grow through the value of the coins, and that's the key to fully understand how the integration of the system will work as a ledger, because that's what it is an electronic ledger. And what a ledger does is what really will take a little bit of time for people to figure out. And to a big extent, the problem with gold, blockchain is the solution. So I'm very happy with both. There is a parallel. You know, I like.
Can they coexist in the future?
Definitely, definitely. Because again, gold is money. The problem is not money; it's currency. It's this paper game that we have afoot. If we have an electronic currency that can be outmoded or plagiarized, printed, I think there's some benefit there. So yes, there is coexistence between the two, and I think it's just lack of understanding and a little bit of ignorance of what money and currency is, right? So I do think there is a parallel for them. But for now, let's worry about how we go through this next storm that's hitting us and, try to make some money out of it.
Interesting stuff. We'll be back with Jaime Carrasco. He's a portfolio manager at Canaccord Genuity. Wants to answer your questions about precious metals and North American dividend stocks. So give us a call, toll free, 1-855-326-6266. It's time for the past picks. We go back to April 16th of 2019. You liked America's silver, and yeah, that worked out. 87%.
Funny, I hadn't even noticed. Yeah, I think it's one that I'm still holding. Again, as I said earlier, it's the leverage, the execution. I just like the management. They've done extremely well, and I think that base that we see right there, it should be much higher than it's currently trading. We don't follow this one at Canaccord, but I've been in it since it was RX Exploration. I happened to be in it when they did a reverse takeover of the company, and I've been following. Management is the M&A team that came out of Barrick. Okay. So it's a very, very experienced management team, and they've definitely delivered along the way. And I'm not complaining with this hold, and just let them do their thing.
All right. I mean, the next one's a winner, too, but it's pretty hard to compare to 87%. Enbridge, total return of 18% since that time.
This is on the core side of the equity income portfolio that I hold. I like Enbridge. It's all of the pipelines and utilities. I personally think that as we go through this change that we're talking about, it's going to be an inflationary wave, and these kind of companies are going to benefit from that no matter what. One of the things, look at AltaGas, for example. Look at AltaGas with regards in the content of the Alberta economy and what they've gone through. Well, the company is delivering a bare minimum of economic activity, paying for the dividend, and that's why I like these type of companies. Anything that I feel is solid infrastructure for the Canadian economy, North American economy, no matter what happens, they're going to have earnings, and at the end of the day, they just pass through any increases in inflation and cost to us. So I might as well be getting paid to pay my bills, and that's why I like Enbridge. The dividend's solid. I've never questioned it. If anything, it's my gauge. I'll never forget. December of 2008, the dividend was up to 9.5%, offered a great entry point. I think we're trading about 6% right now. Maybe it's a little bit higher, but it hasn't pulled back much. So yeah, I would, solid company.
Your final pick was cold, hard cash.
Yes, at that point I was sitting in cash. I've been raising cash over the last year, but I keep spending it as I find new areas. Right now, the cash back then was spent. I was spent on convertible bonds, and I'm still sitting on those, and I think it's a good place to sit on while we wait.
We'll be back with Jaime Carrasco, portfolio manager at Canaccord Genuity, to answer your questions about precious metals and North American dividend stocks. So give us a call. Toll free, 1-855-326-6266. It is time now for top picks. First on the list, Fortuna Silver. What do you like about it?
I like silver. I think silver has way more upside than gold. Fortuna has been in the portfolio for a while now, and it's been the laggard. So it's the one that I, by default, have ended up buying more and more shares as the other one have grown. So I'm quite happy with that. They're building a mine, and that mine's coming online now. It's getting to the end of it, and I think once that comes in, it's going to be one of the most profitable mines around for silver. It's in Argentina, and as that occurs throughout this year, as we ramp up, I think the stock will definitely begin to move. We have it with a 650 target, and I like the project. I like the company, and I think now, they've been building this, so it was a matter of time, and I think we're about to start getting paid for it. So it's not a bad time to be buying it.
Not a bad time. The next one on the list is Osisko Gold Royalty.
Another royalty company I have within the portfolio, but this is more of a senior one. I like it. Good, solid cash flow. We have a $17 target. I like their projects. A little bit safer than Osisko itself. You know, with the royalties, you're taking out the development exposure, and you're getting the cash flow. So it's one, again, that I think it should start to shine now that once we get the break above 18 in silver and now with gold at this price.
Those are two names, and you liked cash the last time. You still like cash?
Well, I was fully invested, but as I was planning for the show here, you know, it would be cautious to have some cash levels. I'm already, you know, most people don't have any precious metals, nor do they have any kind of protection. So cash would be prudent right now, just to race a bit and see what happens. Let's see what, you know, how long this takes. It's just getting, you know, another month of this, and maybe things could get worse before they get better. So not a bad time to be a little prudent.
I guess the tricky stuff with cash is you got the cash, you're being prudent, and then you're trying to decide when is the opportunity, right? Well, so I had a caller earlier talk about bottom feeding. It's awfully hard to time the market.
Well, it's kind of hard, especially with these markets that have been going up forever. I myself, I'm not too keen on jumping in on the market at this level, but I do like the hedges. Everybody that's been following me for a while, I've been saying precious metals and the other side of the trade is the best thing, because I'm a bear of fixed income. You know, look at what's happening in the repo market. I think at some point that will have consequences, and that's what I'm preparing for more than anything.
More than anything, and this idea too that the Fed has everybody's back. The central banks can cure everything. Yeah, you lost faith in central banks a long time ago.
Oh yeah. I think they're the problem, but hey, we can't voice that too loud.
Except on a national TV program.
Exactly.
Any final thoughts for the audience?
At the end of the show.
Before we get you back on again?
You know, precious metals, I think they're going to have a good year, and more money is going to come in. We're still very little participation. It's under 1%. At the height, it was 8%. It's, what is it, half of 1% right now? Nobody owns these stocks, so don't get concerned about the volatility. Just understand that this sector has a lot of volatility.
All right. I mean, it's always a pleasure to have you on. I love the way your mind works. I love the way you connect the dots into stories.
Thank you.
Particularly intrigued about that manufacturing thing. That one's going to stick with me. Thank you for joining us. As always at home, please consult a qualified financial advisor before you make any investment decisions. Of course, you can watch BNN Bloomberg all weekend. We're going to go home and enjoy ourselves, and hopefully you do the same. We'll see you next week.